following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the April 10th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call Beautiful Thought. Oh, question. Have you ever thought of beauty as a necessity in your life? Something to think about. You see, beauty is not only pleasant to the eye, beauty is the essence of being able to live a more productive and a more happy life. When you and I, when we are more receptive to seeing and feeling the beauty around us, we become more attuned to the creative presence within each of us. You see, beauty is inherent within the soul. Beauty is inherent in our soul, folks. Now, there are certain laws of life that each of us need to learn and practice in order to lead a happy, successful life. Seeing the good in everyone and everything that's around us is one such idea. Recognizing and appreciating the beauty that is around us, well, that's another. These laws of life can create a magical transformation in our lives. Beautiful thoughts do build a beautiful soul. I believe there's always something beautiful to be found, right where you are, no matter where you are, so long as you look for it. It is Terrific Thursday, and you are a beautiful soul, and I want you to have a beautiful day, a beautiful week, and most importantly, a beautiful life, because beautiful thoughts, well, they do build a beautiful soul, and as Tom would say, that's a beautiful thing. Let's go check out the beauty in these markets out here. Right now, we've got Dow futures. They're trading off 8 points, trading out at 16,352. S&P futures down about 75 cents right now. Trade out at 1860, 375. NASDAQ off 2 points, trading at 35.89. Russell 2000 off a point at about 11.54. Not a lot of movement in the currency market out here. Looks like Canadian dollar maybe the largest movement going on. Goldilocks up $13, trading out at 13.19. It's been up as high as 13.20. About 13.25 here today, 13.24.90. Silver's up 41 cents. It's traded at 20.18. It's been up as high as $20.40. Light sweet crude back 38 cents right now. Trading out at 103.23. Take a quick peek around the world here. Let's see over in Europe this morning. Green arrows really across the board. Now the FTSE up 25 points. The DAX up 27 points. About 0.4 and 0.3% respectively. Nikkei was flat last night. Closed, was up 43 cents, so totally flat out there. Hang Seng, different story, up 1.5%, up 344 points. The Shanghai up about 30 points, up 1 3/10%. Our call-in number is 877-927-6648. Hope everybody had a great Wednesday. Let's have it's the beginning of Masters. In fact, a ball off the first tee. I don't know who was hitting that ball. I don't know if it was Arnie today who was hitting the ball off the first tee, but the Masters has opened. It is Thursday. In fact, the opening of my Thursday show, it's always golf. It's the golf. It's actually it's from the Masters. It's that shot that was heard around the world. That Tiger Woods had hit on the par 3, number 16 out there, and it's more than just that shot. That shot, it was to me the reason that we play that in Thursday, or why I created that, was not just that shot, which is an unbelievable shot, but really he was playing against a friend of I'm very good friends with Chris DeMarco's brother, and my son is good friends with his son. And in any event, it was more so that Chris DeMarco was leading that tournament up until that shot. when he fell 2 strokes behind. And he had been leading the tournament all the way up through about the 9th hole or so. And it was really what I take from that is most people would have laid down. And he didn't lay down, and it's really the meaning behind that. He focused on what he needed to do next. He ended up going in the 18th hole. The two of them tied, quite frankly, and had to go to extra holes. And Chris almost won the tournament. He almost chipped the ball and hit the flag and just kind of bounced out of there. So to me, that's each of the openings that we do here. They're really to fire me up. I hope they fire you up as well. In any event, let's go fire up the markets out here. Enough of that. Let's go take a look at what we've got going on out here. Let's start off with the S&P futures. Quite a day yesterday. Folks will say, hey, it was fueled by the Fed. And I'll say it was fueled by the Fed, too. But what is it that we knew as we were taking a look? Actually, I'll switch over here quickly. We'll take a look at the 120-minute chart out here. Actually, I need to put up the 120-minute chart. It'll make it a lot easier for us to actually look at it. But if we take a look at the 120-minute chart here on the ES Mini, we've got the NASDAQ. We'll put up the NQ out here. First, we saw that the NASDAQ was giving us what? It was giving us that price relative strength divergent pattern. That's where price was moving lower. It was doing it with less weakness out there. That's a divergence in the marketplace. We got some bullish reversal signals out here. You really got the sign at 2 o'clock on April the 8th. So that was what? This is Thursday. That was Tuesday out there. That the market wanted to move higher. We know that it just kind of moved higher just slightly for a while up until the release of but how did the market know ahead of time? Right? Because really the market was giving us that signal ahead of time that there was going to be a move higher. It's not just the combination of the NASDAQ which is the weak link out here, right? Because you learn a ton from the weak link. But we also have the signals coming from the Euro-Japanese yen, which, as you know, that tracks the U.S. stock market better than any other currency pair that is out there. And very key, very specific, it's the Euro-Yen. It's not the U.S. dollar yen. It's not the U.S. dollar. It's not the Euro-U.S. dollar. It is the Euro-Yen currency pair that you have to be paying attention to. Well, as we speak here right now, markets did yesterday get into a overbought condition on a 120-minute time frame out there. And, of course, they did that nice wide-ranging bar as they were doing that. Markets don't end on a wide-ranging bar. In fact, what we saw really take place here is we saw the market just simply move sideways to work off that overbought condition. Is it overbought right now? Absolutely not. That means that the market can move higher. Just needs to take out the high out here from about, the total 35.99.50. Now, that is the 120-minute chart that we're looking at. If we take a look at the daily chart, in fact, I'll switch over to the NASDAQ. Never did complete that really ideal 3 drive to a bottom pattern. That would have had a move down here today, this morning. Well, I guess I can't say that. The trading session's not over, and as we know, anything can happen. Today would mark, from a time frame standpoint, a 3 drive to a bottom pattern, but price would have to move all the way down to 34.53 out there. Not that that's an impossibility in these markets, but that at this stage here, I'd have to say that pattern is really not existent out here. So I'm going to go ahead and delete it off of our screen. So now what do we got out here that we can take a look at? Where is it that the next resistance point? If you were visually looking at this chart here, if you were watching us on TigerTV, and I hope you would, what would you actually draw out here? Well, there's a number of patterns that we could go ahead and draw on. Let's start beginning. Number one, we could take a look at a trend line, right? So one of the trend lines we could use is the actual high from March 7th. And we could use the top of the candle session from March 21st and say, well, maybe that's the trend. We could come all the way down here, I suppose. We could take it down to maybe the level. That would probably be more likely the trend. If we use the April 2nd high out here, what that does is shows us that from a trend line standpoint, on the session of March 13th, price kind of moved up into that area, very close to it, rejected. We saw price move up just slightly above that on March 21st, rejected it. We see that price, obviously using April 2nd, moved up in there, rejected it. We see that on April the 3rd, moved up in there and rejected it. So I'd have to say that's probably a pretty good trend line that we could use. We could try to identify a price channel out here. If we're taking a look at price channels, what we would use is we'd use the co-located bodies out here. I'm going to go ahead and move this, extend this back. Let's see how close we were. And we're trying to identify at least 3 areas of either an open or a close. And I have to say that last line that we drew out here, that would seem to me to be a pretty good channel line. So let's go ahead and complete the channel out here. Now, I haven't done this. I'm just visually doing this while we're live here on the air and see what we can come up with, because we do want to come up. We want to understand from the week link out here, is this thing really getting ready to break out? I'd have to say that area, maybe, do we use that? I'd have to say using the top of this session here is more likely the case. So I'm going to put that as a down arrow. I'm going to go ahead and get rid of the lines, the trend lines that we drew out there. So let's get rid of that. I'd have to say that is the price channel that we are now inside of the NASDAQ futures here. Here's the descending price channel. So I'd have to say up towards the top of that area is likely where we will see price now gravitate to. Now, if we take a look at retracement areas, if we just take a look at off of the swing point high here, the most recent one that I'm looking at, which is April 3rd, down to the low that was put in a couple trading sessions ago on April the 7th, you'll see that right about the level here of 36.27 is our 0.786 retracement. We can see here just of this last leg, we're at what? We're at the 0.618 area. In fact, let me get rid of the expansions out here. We'll darken up the lines a little bit. We'll go ahead and expand this up so you can see just a tad better. Now, what happened as we were hitting this 0.618 retracement level, 35.95? That's exactly right. It was a wide-ranging bar. I don't care who fueled it. It was a wide-ranging bar. Markets don't end on wide-ranging bars. Yes, look, it's going into this big downdraft session. It's doing with lighter volume. Volume is only one aspect. It's not the only aspect of a market out here. And the message of this wide-ranging bar is that price wants to move higher. Now, does it have to? No. Can it move sideways? Absolutely. And we'll see what's going to happen today. If we do see price move above the 35.95 level with any kind of conviction, well, 36.27-ish is likely our next target out here. And probably the next real target from a shorting opportunity, potential shorting opportunity, is as price hits the top of that descending price channel. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So, we were taking a look at on one charting tool. We're going to switch over to another charting tool here. And really, this is the first time that I drew in these channel lines or trend lines. Just really was, saying to you, hey, I was looking in essence at a blank stock chart. And what was it that was standing out to me visually? And, one of the tools that we use out here are trends in channels out there. In fact, Bud Rolfs has got a great workshop. It's coming up on this Saturday here on channels. If you'd like to learn how to use channels from the master, really do suggest that you invest in yourself. Go over to the homepage of TFNN.com. You'll be able to sign up for that. And while you're doing that, go ahead and sign up for Tiger Dollars. You can even reduce the cost. Look, folks, we spend a lot of time feeding our bodies each and every day. Most of us woke, and at some point in time early on, we were wondering what were we going to have for breakfast. The key here is to make sure that you feed your mind. Feed your mind as much as you feed your body out there. And be willing to invest in yourself. Now, as I took a look at this, I just simply said, okay, we've got these channel lines out here. We've got a 0.786 retracement level. We had a wide-ranging bar coming into one of our Fibonacci numbers. Markets don't typically end on a wide-ranging bar. That doesn't mean it goes up forever. It means you got to really pay attention to the next couple of bars out here. But the likely outcome of moving to 36.27, PDG, pretty darn good out here, and especially since it would be moving up to the top of this descending price channel. Now, coincidentally, because I just simply went over and took a look at the other charting tools, I use really 2 other sets of charting tools, those on eSignal out here. As we take a look at the Taz Signal Box tools, another great thing for you to invest some time in, and go check out the videos. I don't know what John did here this morning, but if we take a look at the now go ahead and put up the 120-minute chart, since we were looking at the daily chart out here. And I think the number, I think it was 36.27 was the number. Now, if I put up the 120-minute time frame, and yesterday we looked at this, and we were taking a look at the resistance line, sometimes referred to as the unfair high level, as we were coming into the market open yesterday. And, we looked at the euro-yen. We said, look, that's pointing higher. We, in this case here, the NASDAQ, the 120-minute chart, it was up above that resistance, that unfair high level. That means it had freedom to run. And what I said was it really had freedom to run up to the first area of resistance that it would likely run into, about 36.15. The blue lines that you see on my chart here, they're a linear regression line. Oftentimes they act as targets for where you would take a look at longs and shorts. You can see they sometimes act as pretty decent support and resistance area. Just happens to be that right around the 36.27 level happens to be the top of this linear regression area out here. So I'd say pretty good chance, because price here on the 120-minute chart still has the freedom to run. Remember, I use the analogy here. The easiest way to link the easiest way to learn anything is always link the known to the unknown. Let me do this here. Let me put the See, I've got another number of tools here that over time I'm just perfecting the settings with inside eSignal on these. These allow me to take a look at, just automatically go ahead and create butterfly patterns, a number of different things out of it. In fact, you can see here's a butterfly pattern. My concern here is the actual swing point that it chose to create this butterfly pattern, the red one. The real way that I teach is would be using the swing point all the way back here at about 8 o'clock in the morning on March 27th. So trying to see if there's a way to perfect the setting out here on that. But in any event, the number of tools that are in place, and one of those tools here, we can go ahead and see what the traffic looks like. What's the traffic pattern inside the TAS signal box? It's called the market map. And you see that market map where you've got these lines coming across here. There's really no congestion, and it's like you driving. Maybe you're driving right now, you're listening, and if you got no congestion, it's somewhat pedal to the metal within the speed limit laws. That means what? Plus or minus, well, not minus, but maybe plus 10, 11, 12 miles an hour, maybe you can get away with without getting any kind of a ticket. I'm not endorsing that. I'm just telling you what Stevie's formula is for driving out here. So no real congestion. A little bit of a bearish candle that took place at 4 o'clock in the morning, but I don't give that. It was compared to the wide-ranging bar that we saw yesterday, 2 o'clock in the afternoon. It was really just working off an overbought condition out here. So the 36. So we've got a couple different tools out here, all giving us about the 36, 27-ish type range. If we take a look at the daily chart inside the Nasdaq, now the daily chart says the point of control, the area where you see the largest number of transactions, in essence, taking place right around the 36, 10-ish level. You're at 35.91, and then real resistance on the daily chart takes us into 36.72 on the Nasdaq. So we'll see. And this is the weak of the weaker of the indices. If this thing gets above 36.72, we probably have going on here. We probably have a real market breakout that takes us towards the end of April into the sell in May time period. But we'll take this one day at a time, one moment at a time. Let's go see how these markets are going to open. They're going to pop. Well, maybe not. Maybe it's just going to be a flat open. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We got the Dow down 20 points. Trade out at 16,416. S&P off 3. Trade at 1869. Composite down 9 points at 4174. Russell 2000 off 2. Trade at 1157. Popping to the upside here. We got Cash America International. CHS. Johnny Cash out here. That is up 10%, 11% here this morning. Let me see if they were out with any kind of numbers here. I don't see the exact numbers. We've got Celadon Corp, CLDN. That's up 25% this morning, up $2.75 out there. Solar City, SCTY. That's up $2, up 3.5%. Las Vegas Sands up 1 6/10%, up $1.20. GOGO, GOGO is the ticker symbol, up $1.53. Automatic data processing, ADP up 2% this morning. C.H. Robinson Worldwide, that's up about $1.24 to the downside here. We've got Impervia Inc. down $19, off 38% this morning. Amazon down about $4.60. Bed Bath & Beyond, they were out with numbers here after the bell last night. They're trading down about 5% this morning. Toyota is down 2 6/10% out here. Got a request here, came in by email from one of our listeners. The question says, I was thinking of shorting SAND, S-A-N-D. It has an A, B, C, D up, and looks like it'll come down. Now, I was thinking maybe to about $4. What's my opinion? So let's go take a look at SAND, S-A-N-D. That's Sandstrom Gold. They are a gold streaming company. They focus on acquiring gold and other precious metal agreements from companies that have advanced stage development projects or operating mines primarily in Canada, Brazil, and Mexico. So let's go check out SAND. And thanks for sending an email and a request to go take a look at a equity. Now, I'm going to put the daily chart up on the screen first here, and we can see that it's trading at $6. So my first comment with regard to shorting any kind of a equity, any kind of a stock, you like to short something that is at least this is not related to ETFs, so this is just related to an individual stock. What you like to do is look for something that is north of 50. Maybe north of 100, maybe north of 200. You want to short the highest dollar value stocks you can. What's the reason? What would be the reason to not short a $6 stock? Because in order to even make $6, it has to go out of business. It has to become worthless out here. So your downside potential is relatively small. I don't know if these guys could be bought out, because they could easily be bought out and somebody might pay $7, $8, $9, $10 a share. Who knows what? So your upside potential is pretty much unlimited here, and your downside potential is very limited. Now, I think very intuitive of the listener with regard to, hey, is this maybe up against a resistance level that he's identified, and maybe it would bounce down to the $4 area. And I think very intuitive there, so I want to answer the question that way. But with regard to take a look at a shorting vehicle, please don't short something that is $5 or $10 or $15 or $20 out there, because when you really take a look at it, your downside potential is so limited and your upside potential truly unlimited, and we don't know what's going to happen next. And you've got entities that are flushed with cash, right? You've got companies that are struggling to make top-line numbers out here. Merger and acquisitions are going to be on the upslope here for a good time to come out there. And if you were the CEO of a company and you wanted to make, you wanted to get your shareholder value up, you would be looking for acquisitions. You would be looking to go ahead and use that wallpaper, that stock of yours, and try to buy companies out there, and that would be my real concern here with regard to shorting sand. Now, let's take a look at shorting. Let's take a look at sand itself and see what it is doing. Well, that didn't help. Whatever it was that I did there, I just changed something, man. That's weird. Let's just turn this thing. That was pretty crazy. Well, I know it. I can do it. I can do it a different way. So Stevie's always got a backup somewhere, or he should have a backup somewhere. Well, let me do this. Sorry about that, folks. That was interesting, to say the least. So let's go ahead and do this again. There we go. So now we're going to take a look at a daily chart. Let's punch it up on the screen out here. There we go. Okay. So now all I was really trying to do was just pull this back. I probably just expanded the RSI is what I did. All right. So we take a look at the daily profile system here. Inside of this is the TAS signal box profile, works on individual stocks as well. We can see that the so-called unfair high, the resistance level, is really $6.06 out here. Now, price is traveling up towards that level. If price gets above that area, that's really considered a breakout. That would say, okay, price wants to move higher. So this in essence, the stock is up against a resistance area. Its back is up against the wall. Let's assume that it was $600 stock or a $60 stock they were looking at. Let's just add a zero to it. Well, then I would have to say to George, you know what? Back is up against the wall here. Might be something worth taking a look at. But then I would go and look a little further over to my left and say, whoa, wait a minute here. You're taking a look at an equity here that had a breakout. Take a look at the volume that came into this equity. This is back on the trading session of March 12th. Did volume out there, it looks like about 2.5 million shares. Let's take a look at the next day out here. Next trading session, March the 13th, up with even higher volume, 2.9 million shares. If anything, we would be saying to you, you want to go ahead and you want to buy stocks that are pulling back into breakout areas. That's exactly what Sandstrom did. That's exactly what ticker symbol SAN did here back on the trading session of March 27th. It pulled back with 837,000 shares. That was really coming into a breakout area that had what? 2.5 million shares. So really, in essence, this is actually looking more bullish than bearish out here when we take a look at SAN. Let me put up the other chart out here. Let me put up the signal chart. You can maybe even see this against this white background even clearer out here. Take a look at SAN. Take a look at this thing here, how it's pulled back. In fact, if we take a look at gold stocks in general, let's do this. Let's take a look at, let me do this out here. Let me add to it, because I can overlay gold. I can overlay the gold contract. So let me go ahead and do that. So give me a second here. So I've got GC. I'm going to use # equals 1. So give me a moment to do that. Now what I'm going to do is I'm going to put this in the lower window out here. And let's see if that, does that work? What did I not do here? Oh, I hit browse. I don't know why I hit browse. Just need to hit OK. There we go. Give me a minute here to do this, folks. Okay. So now what I want to take a look at doing here is we're going to take a look at gold off the bottom versus Sandstrom off the bottom here. So I'm going to come we're going to come down to the swing point from, in this case here, was December 23rd out here. I'm going to go from that low to the high, which was on March the 14th. What we can see here is a retracement, probably about a 50% retracement. The 0.382 retracement, $5.84. I'm going to do the same thing here for gold. I'm going to go from the swing point low, which in this case here was December 31st out here. And really, similar tracking very close to Goldilocks out there. So that being the case, what did that show us? Didn't show us anything. What it did show us is as equities go, as the mining equities go, this thing here has pulled back nicely. I mean, no significant retracement or anything whatsoever out here. So a very strong-looking equity, and you don't necessarily want to short strong-looking equities. You want to short something where you can, where it's really showing some weakness. And I just have to say that in this case here, this is not something, for a number of reasons, this is not something I would be looking at shorting. What I would be looking at doing, and I will say thank you for pointing this out to us, here's something that you want to take a look at to the upside when the retracement is over. Maybe the retracement is over. I can't, we haven't looked at gold yet today. We'll go take a look at that here in just a moment. But to me, this would not be a shorting candidate that I see out there. So I do appreciate the question being sent in and us being able to take a look at it, and because the answer is really a number of different questions, at least with regard to Stevie thinking when it comes to taking a look at shorting any kind of vehicle out there. Now, speaking of gold and silver, let's go take a look and see what's going on inside of Goldilocks and silver. And let's do this here. Let's take a look at let me switch over to a different tab here. Seems like I've just messed things up just a tad out here. So let's take a look at Goldilocks and see where it is traveling into right now. Let's take a look at both the daily and the 120-minute time frame. So on the daily chart out here, the daily chart shows that prices really hit the so-called point of control area, right in this 13, 20, 21, 22-ish area. That's this blue line going across my screen out here. So gold really from the TAS signal box perspective really has not broken out. So that's one way of taking a look at it. On the 120-minute chart, let's see what the 120-minute chart here has to say. We've seen an A to B equals CD to the upside, about the 1 to 1.272 area. That would actually take us into the price point of 13.28. We haven't seen that yet. We've hit a high here so far of 13.2490. So close enough. I would have to say for the day, though, you get above 13.2490, it should go ahead and complete. It should run into resistance right around a 13.29-ish type level out here. So that's what the 120-minute time frame is showing us. Let me switch over here and take a look at Goldilocks with instant window, see if there's anything else that we can take a look at. Well, one of the things we can look at here inside of gold is what? If we go from the swing point high of March 17th down to the low that was put in here on the trading session of April Fool's Day, April 1st, we'll see all we've seen here is a dead cat bounce, a 0.382 retracement. So been a nice little move off the bottom here. It's an area where people would normally run in and take some profits off of the table out here. We'll see if this pulls back and what the pullback looks like. Should there be a pullback, does say, hey, gold can move up to the 0.618 level. That would be 13.48 out here. But with regard to the other thing that's on this chart here, happens to be the U.S. dollar index. It's inverted, and the U.S. dollar index. And so it's really, unfortunately, we really can't use. We can't use the U.S. dollar index as, to a certain extent, as anything more than really a directional indicator out here. It's not as if there is a tick for dollar value inside of the U.S. dollar index versus gold. At least I haven't been able to find one that would be consistent. Now, on days where we see the U.S. dollar index, really weaken out here and gold or silver not do a whole lot, it does send us a signal. But we always have to come back to reality. And reality is that when we take, in my opinion, my reality is that when we take a look at currency pairs, they help us to identify direction, not necessarily the price value as to whether something is going to move higher or lower out there. And we'll go take a look at the euro yen here. We'll take a look at the currency pairs in a moment, as long as I've mentioned that. But let's take a look at silver. What has silver done? Silver's made a nice move this morning. It ran right into resistance. I identified resistance for you yesterday inside silver and said it's the 50-day exponential moving average, which also was in conjunction with the old consolidation box that it had been traveling in. And that was a price point of $20.37. The high so far that we've seen is $20.40. Thus far, that has acted as resistance. Look, silver here now has another resistance area that it's got to contend with, and that's the descending price channel all the way off of the highs back in 2011. That's the red diagonal line to the bottom. There's a number of red lines on my screen out here, but it's this red diagonal line that my cursor here, my mouse cursor, is traveling down, and that becomes the next area of resistance. So if silver can break above that, and especially if it would do it with a nice wide-ranging bar out there, that would most certainly get my attention. I think the attention of many others in the marketplace out there. So that's what's going on with silver. Let's go look at light sweet crude. A couple days ago, we were taking a look at light sweet crude. We were looking at resistance areas. I was saying, hey, here's a potential trade setup. Take a look at the SCO, and I really clarified potential because what I like is a reversal signal before we take some type of trade out here. And we most certainly did not get that inside of light sweet crude. Instead, what we have here is a little bit of a breakout. And this says here that light sweet crude, if we take a look at the swing point high, that is March 28th. The level out there is 102.24. That's a B point of an A to B equals CD to the upside. 202,000 contracts on that session, taken out with 254. So now inside of light sweet crude, and we are taking a look at the May contract out here. What we've got now is a confirmed A to B equals C to the upside. Let's see where price takes us to. Voila. Takes us all the way back. The 1-to-1 A to B equals CD takes us all the way back into this swing point from March the 3rd. The high out there is 104.48. Very likely that is what light sweet crude wants to do, is to go test that area. Now, if it tests it, meaning it gets to 104.49 or something above that, closes back below, we'll have to take a look at volume. We'll have to go back a contract and try to correlate it to what the volume was at that stage out there. We'll have to take a look at what the type of candle it is that gets created should that occur out here. But it does look like light sweet crude wants to at least test the 104.50 level. If it can get above that, where will it move up to? Well, you could see light sweet crude here try to form a butterfly pattern. You might say, hey, what's a butterfly pattern? Well, it's an expansion of a set of swing points. And we get back from this break, we'll go check out light sweet crude. We'll take a look at the potential butterfly pattern that could be setting up here. Right now, we've got the Dow is, I've lost it. Where is it? Give me a moment here. I can tell you what it is. The Dow is up 3 points. S&P down 1. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Right now, with the Dow's off 15, S&P down 3, Nasdaq Composite struggling off about 0.7%, down 31 points right now. Let's go back out to light sweet crude. Let's check in on it. So I was talking about the potential for really two patterns out here to look at. Number one was the completion of this 1-to-1 A to B equals CD, or a double topping pattern. That being a test of the March 3rd swing point high in the 104.48 level. If, in fact, price closes above that area, then that would set up the potential of a butterfly pattern. A butterfly pattern, we're going to take the swing point high from March 3rd. We're going to go from that high all the way down to the low that came in on March 17th. A 1.272 expansion of those sets of swing points would say 106.51 would be that pattern. So between 105.50, 106.51, 105.50 completes a 1.272 A to B equals C to the upside, and 106.51. That gives us our 1.272 expansion. That's, again, of the March 3rd swing point high and the March 17th swing point low. I like to take the measurements here also of the B to C swing. So if we take a look at the Fibonacci expansion of that as well, see where that would come together. You've got your 1.618 expansion. That takes place right at the double top out there. So that really is not going to, from a Fibonacci expansion standpoint, that's not going to come into being. Let's go ahead and we'll colorize this. We'll put this pattern in here. We'll go ahead and leave this stock chart out here. So we know double top is one area that we'd be looking at, and the other is this butterfly pattern right in that 106.51. Let me clean this up here, and then we will be all set. And there it is. So there is your potential butterfly pattern inside of light sweet crude. Let's go check out the VIX index. Let's go see what it is doing here this morning. See if it's above or below the 50-day exponential moving average. A sideways move. It's below the 50-day exponential moving average. We know when the VIX is below that, the market's going to do one of two things. going to either move sideways or it's going to continue to move higher. That is a liquidity gauge. Let's check our other liquidity gauge out here. That happens to be the euro, Japanese yen. Let's go chicken on that. Let's go see what it is doing. Is this bullish or bearish? Yes, you are exactly right. It's neither. It's right now a little bit bullish, though. It's neutral to bullish. Why do I say that? Well, we're consolidating. It is consolidating, I should say. What we do know about this is that the bottoms have been tried to have been broken out 1, 2, 3, 4, 5, 6 times here since the breakout session from March the 6th. It's not been able to break it out. This looks to me like the euro yen wants to move up, perhaps all the way to the top of the consolidation box. And if that's the case, that is signaling to us these markets are going to move higher. For how long, I can't tell you. Well, I can tell you they move higher until the top of the consolidation box is tested. At a minimum, we ought to see the euro, Japanese yen move up to 142.17 out there. That is your 0.618 retracement. And as it does that, that says the market should continue to move north out here. So be careful if you are short in this marketplace, because I can tell you at the moment, I just don't see it. I just do not see it here just yet. The chart patterns are not giving us that indication out here. And again, if we take a look, here's the ES Mini, by the way. Here's the ES Mini. This gave us that nice price relative strength divergent pattern. Whoops, didn't mean to do that. Let me come back here. I was just going to expand this out for you. Seem to be having a little bit of trouble. That didn't work either, did it? Come on, expand for me, would you? There's the expansion. Here you've got that nice price relative strength divergent pattern. This 1859 area-ish, 1859-ish, acting as a support as we speak here right now. But look, anything can happen. I'm open to anything, just waiting for messages from the market. But right now, the message from the market is it wants to move higher out there. So, folks, it is Terrific Thursday. As always, thanks so much for joining us. Stay tuned. The Money Masters show is up next. If you're off to start your day, have a terrific day, and I look forward to seeing you bright and early tomorrow morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.